I'm Ashton Addison from Blockwest Capital for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Barney Mannerings, the founder of Vega Protocol. Barney, welcome to the show, and thanks for taking the time to come on today.
Thanks for having me, Ashton.
You're very welcome. I'm excited to dive into the intricacies of decentralized trading, derivatives, all of that exciting, new and up and coming, I think really crucial part of cryptocurrency that we're leading into. And your team at Vega Protocol is really working on some interesting innovations I'm excited to dive into. So I would love for you to kick it off for us with just a high level overview on Vega Protocol, some of the solutions that you're bringing into the cryptocurrency space.
Awesome. Yeah, very happy to do that. Vega Protocol is focused, as you kind of mentioned already, on derivatives and trading. And the reason that we felt the need to focus on those areas is because they're quite complex and they actually require fairly unique and sort of niche solutions, if you like. And what we realized when we were looking into sort of originally trying to build stuff like this on things like Ethereum was that those protocols, those blockchains are designed for general purpose usage, if you'd like. And just in the same way that you wouldn't use WordPress to host the London Stock Exchange or the New York Stock Exchange, you find the same sort of problem when you try and sort of shoehorn derivatives onto a blockchain that's not designed for it. And that has all kinds of unintended and not particularly nice consequences, whether it's sort of the cost of fees, whether it's the amount of collateralization required, or any of a number of different things. And you sort of see this today when you look at even with spot protocols, and you look at the fees and the slippage and the other things, and you sort of see that compared to liquid trading venues, and it's not so great. But it's just even worse when it comes to derivatives. And so what we decided to do is, I've got a lot of experience working in kind of traditional finance before I moved over into crypto, and I've built trading systems and seen how those things work and understand how to build capital efficient systems. So we decided from the ground up to design a blockchain and a system that could do capital efficient derivatives trading in a completely decentralized way. And the other thing that we also decided to do was that we needed to build something that was part of the ecosystem, not kind of trying to create its new ecosystem. You see there's a few chains out there, they've got a high performance chain and they're trying to basically move everything to that chain and ask everyone to change. And we sort of didn't think that was right. And actually we think that the best thing to do is to build a layer that can actually be integrated as kind of an L2 or a side chain to multiple chains. So, Ethereum is the first integration in ERC20s. We can attach Vega to Solana, we can attach it to Cosmos, to IBC, we can attach it to Polkadot, and so we can sort of do the cross-chain thing as well. But the important thing is that we kind of separate the entire DeFi ecosystem success and building a derivatives layer so that we can provide that extra capability and that is sort of improvement for derivatives trading to wherever the ecosystem needs it.
Definitely great intro and great analogy. You definitely don't want to build an exchange on top of WordPress. You do need some, more innovative technology and something that's more specific for the task at hand. And I like that analogy that you had there as well about, Ethereum. Obviously, we've been looking at trading on Ethereum and the fees and how it works for years now. And it's not as efficient as it could be, especially when you start introducing, high-speed trading, derivatives, and introducing an industry that in traditional finance is so big right now and really is, I think, underserved and underdeveloped in cryptocurrency so far. We're seeing a lot of spot trading. Seeing futures volume is actually doing decently well in cryptocurrency, but options and other derivatives there's still so much growth compared to traditional finance that I think there's a huge market for it. And so as you were building out Vega Protocol, obviously looking at introducing more kind of financial products and DeFi in a decentralized way into trading, what were some of those main solutions, or what were some of the main points that you were like, we need to ensure that we have these things if we're going to build a proper decentralized exchange?
Yeah, great question. And actually it goes sort of to the heart of what we do perhaps differently than a lot of other DeFi projects, which is we started out from the perspective that we thought that the sort of traditional centralized markets were unfair and not very good. And so where you get a lot of DeFi that's kind of built for, as they call it, degens or whatever, it's built for people with their Ethereum, with their Bitcoin, wanting to trade tokens. And that's a great use case that we care about too. But what we realized was that we had seen inefficient markets. We'd seen markets which are controlled by a small number of players in the real financial markets. And we've seen the real impact that has on small businesses, medium businesses, individuals, on the availability of these products to certain countries and geographies. And so we really started Vega with the intention that you had to solve for making decentralized trading better than centralized trading, not just better than the other decentralized products, but actually better overall for at least some use cases than the centralized traditional financial market. So that was always in the back of our mind. And there's a few challenges that brings forth. The first one that we talk about a lot is capital efficiency. And put simply, like if you're let's say you're an importer exporter, you're exposed to the euro dollar exchange rate. You might want to hedge that. You get 100K of liabilities in dollars. You're going to hedge that in euro dollars, and you're going to take out a futures contract. You're not going to take out a futures contract if the collateral required is 2.5 times the amount that you need to hedge, because you probably don't have that much working capital for that kind of thing, right? It's just not going to be worthwhile. And so you need the capital efficiency to be sufficient. And so, we need to be able to offer those kind of products where eventually someone could use stable coins to make that kind of hedge, and they're paying a fraction of it because that relates to the volatility of the product, and that's something you can do. So capital efficiency is important. Fees are also important. Price discovery is very important as well. So, one of the problems with very high fees, and two problems that you see on sort of decentralized exchange today is very high fees, but also lack of limit orders. So that means that if someone has a view about the price, they have very little incentive to tell the world, because it might cost $100 in fees to do that, but also maybe no mechanism to do so on the decentralized exchange. And people like Gauntlet have put out the paper that shows that AMMs are a great source of price if there's a centralized exchange to arbitrage to. But now you're dependent on the centralized infrastructure again. So we wanted to solve for that problem as well. And if we solve all of those things together, you end up with high capital efficiency. You end up with a decentralized exchange that can be a venue for price discovery. And then you can really start talking about saying this infrastructure can replace the need for the centralized exchange at all.
Definitely. Great points, Barney. And you're right. It's the decentralized exchange ecosystem has to be easier and more intuitive to use than centralized exchanges. And I don't think it's at that point yet. Never mind having to pay the fees and not having those extra functionalities, where you can put limit orders without having to pay fees. So definitely things that potentially be solved with Vega Protocol. I would love to get your take, being in the derivatives, options, and decentralized exchange space, on where the space is at right now. Is it being underserved? And how quickly, with Vega Protocol and the industry moving into decentralized derivatives, is this space going to explode?
Yeah. Is it underserved? That's a really, really interesting question, because on the one hand, yes, I think, compared to what we all think that this technology can do right now, it's really just sitting on the sidelines demonstrating the sort of some core competencies. But equally, I think you alluded to this, it has to become easier to use and all of that. And so, is it underserved given what it can currently do? Maybe not. Like maybe actually first we need to get a few things sorted out in terms of UX, in terms of accessibility, in terms of even the regulatory side of things. Obviously, on the one hand, you've got to make a case as an industry for a slightly different approach to regulation perhaps than there is with centralized exchanges, because the counterparties that you might regulate don't exist or don't make sense in the decentralized world. So there are differences, and there's a lot that needs to go on there. But equally, people work and live in a regulated world. And so if your small businesses and individuals are afraid to use something because they're worried about the risk, rightly or wrongly, then that's going to cause a problem. So ultimately, the industry's got to get past some of that, and with the help, hopefully, of the regulators, and hopefully the governments and regulators will kind of step back from the brink of some of the things, sort of happened in the cryptography, the crypto wars, originally. So hopefully that stuff will get sorted. But also then there's the UX. But MetaMask is 100 times better than what we had when we first started playing with Ethereum, and we were signing contracts on the command line and all of that. But it's also 10 or 100 times worse than what you get when you open your bank's mobile app. And MetaMask on mobile again is a bit of an improvement, but we're still really just at the very edge of those things. Account recovery is difficult. There's a few people like Argent doing good work there, but I think we need to get to this point where it's all much more familiar and recognizable and usable to people. And we need to get to the point where the UX has got to a point where sort of mainstream use cases can get there, because there's actually a huge amount of demand that is not satisfied. And you can see this because you can see the amount of uptake we have just within crypto from a small number of people jumping through hoops and paying hundreds of dollars of fees at a time. So, if you imagine when we sort those problems out, I think the amount of demand is going to explode. And I think, we're probably somewhere between 1 and 3 years away from seeing that sort of next leap from the kind of the DeFi explosion of techie DeFi crypto obsessed people to the kind of the real world explosion of use cases where it actually means something. And probably if you're looking at the sort of emerging economies and the places with, perhaps less stable monetary regime, let's say, that's probably where you're going to see some of that explosion first, where there's less trust in the traditional system.
Mm-hmm. Definitely. And I completely agree. And I'm glad that you mentioned that about DeFi and really expanding it to, not just the crypto degens, but traditional retail investors and institutional investors as well, moving from derivatives in TradFi over to a decentralized exchange where there could be more opportunities. And I would love to get your perspective on, as this explosion grows and moves into institutional investors that aren't in crypto and getting more people in that haven't been involved in decentralized exchanges before. How do we follow along with that growth, and sort of what are the DeFi metrics that we should be looking at that are important to look for opportunities and to see where the industry is moving?
Good question. I think the number one metric and the number one metric that I think we should be replacing TVL with trading volume. And the reason I say that is because TVL proves that you've locked up a lot of money. It doesn't prove that it's working efficiently. And so once you start to get more and more efficient things, it's going to be actually a race to lock up as little as possible while doing as much volume as possible. So perhaps the amount of trading volume we're doing as an industry is an important metric, but equally, perhaps the amount of trading volume divided by the TVL is some kind of measure of efficiency that actually says, how well are we doing and how does that compare to TradFi? Whereas, as some of these things are incredibly efficient, especially if you're a large institution. So that's probably one of the main metrics. And then I think the other ones would probably be usage metrics. And these probably differ depending on whether you're looking at sort of retail usage or whether you're looking at institutional, but actually some of the more traditional business metrics of kind of, what are your daily active users, monthly active users? Are people coming back to it? Is it taking off in sectors outside crypto? Because let's face it, if you're definitely hodling Ethereum, then you can lend your Ethereum and you can get some USDC and you can use that in a DeFi protocol. But that doesn't necessarily prove the demand because it's kind of captive. If you're already decided you're hodling Ethereum, that's a captive market. So actually seeing how much the growth comes into the sort of the market where there's a choice that isn't decentralized, I guess, is something that we want to see.
Definitely, great point. And yeah, it's interesting to see people comparing TVL with trading volume and ensuring that all of that isn't just in collusion or just the team or wash trading or just money that's locked up that's not really usable. So I'm excited to see how that plays out as the industry continues to mature. And speaking of metrics, I just wanted to go back to the protocol itself right now, and for the viewers that are just unfamiliar, give a snapshot of where Vega Protocol is at with all of these decentralized financial products.
So yeah, Vega is very, very close to, I think, the first mainnet launch. Earlier this year, we completed a sort of a coinless sale to the community. We are the token is now sort of officially launched, if you like, which is the governance token that actually powers the protocol and the governance decisions, and is kind of precursor, if you like, to the mainnet launch. And there's a few stages. We had the kind of initialization phase in which the token has now been launched. Then there's a kind of a mainnet launch phase where initially it'll be a governance and staking mainnet, and that's really about making sure that the network is running and the validators are there. And you can follow along on our blog and see the selection of the validators and the launch of that network, which I can't give you a date because it's actually the validators are doing that and it's out of our hands, if you like, but should be coming soon, as all good decentralized things are out of our hands. And then from there on, really it's a case of launching the first products, which is the MVP is to have cash settled futures, so keeping it fairly simple. There's a lot to bed down in a new protocol like that around market making and liquidity provision, around how the order books work and how the sort of price protection and the other sort of protections that are built into the network work. So Vega actually has some pretty sophisticated, price monitoring protection and things to prevent sort of massive slippage and big flash crashes and stuff like that. And so it's a bunch of stuff that we really want to get out there. And there's so much you can test in testnet, and we've been in testnet with all of those features for a year or so now. But at a certain point in time, you actually need to put it onto real money and see how it behaves. So that'll be the first goal, not lots and lots of trading volume or anything, but just actually getting it live and demonstrating it working and seeing what we need to fix and what needs to be tweaked. And then we'll keep making code releases and, over the next few months, get it into a place where it's really ready for people to start building lots of exciting markets on top of. So I think the next few months are going to be really, really exciting for the protocol and for the ecosystem. As we sort of launch the first network and as the first sort of code releases get out there, then partners and ecosystem members and community can start building on it and really playing with it. So a really exciting time.
Definitely, and it sounds very exciting. And yeah, I'm looking forward to seeing that mainnet launch. And you're right, it's one thing to build a decentralized derivatives exchange, and then it's another thing to have it truly fully decentralized with the community governance and having other people be able to contribute and have a role and a say in the market. So it does sound like quite a big feat, but I know your team has been working on it for quite a while, and it looks like it's going to be very promising as it comes out. So I'm looking forward to seeing it released. For the viewers that are looking to follow along with that mainnet launch, all of the other updates from Vega, learn more about the token, what's the best way for them to get involved and learn more?
Yeah, but probably the best way is we've got our blog at vega.xyz. Vega.xyz is our homepage, which is undergoing a bit of renovation. It's probably a little bit out of date and a little bit in need of some work, but that's happening over the next few months. But the blog is a sort of really big hive of activity. And then Discord, we have a very active Discord server where I really encourage people to come in and ask questions about the protocol, the tech, whatever they want, and we'll come and try and answer them as best we can.
Sounds great, Barney. I will leave all those links in the description box below as well. All the best leading up to the main launch. I'm excited for that as well. And let's follow up in the near future.
Awesome. Great chatting.